All right, we are connected. Sorry for the technical difficulties, y'all. Welcome back. Man, what a choppy, nasty week we've had, but we're starting to actually get some good scalpable stuff for us day traders. And then the swing trades are starting to line up. We've got quite the stack that we talked about on Tuesday and as well as last Thursday stuff bleeding over. So I kind of kept everything in that list for stuff to follow up on. And then we got a couple new additions to that list to add. But I don't have anything too spectacular on my end other than all the nuclear stuff. I'm basically going nuclear, as you said.
Yeah.
I've got one that's kind of abstract that I wanted to add, and just I wanted to get this one out first because it's a very fast mover. When it does go off, I haven't traded this thing since 2018, back when they I guess won a patent for some sort of new design on cooling rods, but Lightbridge is the company. They do cooling rods, and that's going to be probably in demand. So of course it's bounced up like 23% this morning out of the gate, just like a shot. Got some basic liquidity zones on this thing. If you consider this your market capitalization, market structure thing, this would be the second accumulation after the first squeeze. So this is looking like it could start to range in here between, about where it's at now and about $4.20 or so is about the reversion target. This one can kind of get your lunch though. So like hype will just slam this thing up, and then it's just, I mean, look at this candle here. Like you have a daily bar just ran up 2 days in a row and then ate half back like nothing. This is the thing that will rip your face off. So be careful with this one if you're going to scalp it, by all means. But if you're going to invest in it, wait for the capitalization range to break and make this company actually worth investing in, because this thing is a vicious mistress. I mean, you can see, look left on this thing. This thing's been, hemorrhaging cash for a long time to be anything fruitful. Even the monthly chart, good lord. There's reverse splits in it. It's why I haven't traded it since 2018. But looking at it now, I'm like, well, maybe it's got a shot at getting out of this range and starting to string up a little bit of accumulation in this range, and then maybe eventually become profitable. But with the whole, draw on all the nuclear facilities for supplying power to the AI boon here, and then the CEO of Google coming right out and saying that this morning, kind of all lines up. Things are going to start looking good for nuclear. Um,
Things have been looking good for nuclear and will continue to look good for nuclear.
I agree. And this is one of those abstract companies I think that's got a potential. Watch this range here. If we break out of like 350, we could see this thing start to accelerate towards that 420 mark. But like I said, don't hold your breath on this one yet. Just kind of keep an eye on it. Scalpers going to be all over this. I'm one of them. Just be aware that this thing has quite a bit of hype, people chasing it, and this is where people get just destroyed in that chop. So just be careful. Be nimble with this one. And then I'm going to trade it off to you. I'm sure you've got a lot more exciting stuff on your list than I have on mine.
Yeah, I mean, I'd be looking at the nuclear names we've been talking about and buying some dips. So SMR is, it's dipped into its 10-day. To me, that wouldn't be a bad place to go. NNE is similar.
And NNE's been playing very nice. I'm gonna throw. I haven't doped the chart up a lot on SMR in a while, but I think you can pretty obviously see there's a plain move there. We're probably gonna need a twofer out of this thing. It's beaten the reversion trade, so that's looking strong. Let me stack up the third box here. We like to teach price action in this and give some education, but we also like to give some price targets, and that's kind of why we're doing this and why you're here. And we appreciate you guys following us. Thank you for watching our show. It's not just for entertainment, it's for, education as well. The entertainment part we'll get to later when we throw some shade on Jim Cramer, which is coming. I'll put an analyst target on this one. For me, my unofficial analysis says probably about 1440 will be a breakout for this to target after gets above the 1.5 mark. You can see it stopped right there and pulled back to Matthew likes to use the 10-day. I like to use the 8-day. Same. 2 days
Same thing.
difference. Close enough.
Yep.
Watch it hold this level. It comes right back to, the primary and secondary move support is right there at about 1190. And if things continue to accumulate in this, we should see this reach for that B target in the top of our measured move and hit my analyst target. I like it. And then the other one was NNE.
NNE.
Yeah, that thing has just been a beast. I love the dope on this one. It's easy. Primaries here, you can see it's already done a primary. This is actually the secondary, but then it accumulated, gave the half back, and now we're breaking out above it. It's hit again. The 2-for-1 target half is right here. We're above the regression line, reversion line. This is about half this trend. And same accumulation. If it continues above, let's see, we got, about $18.15. I'm going to throw my analyst target on here, about $20.45. We'll call it that. Close enough. For the short term. Long term, if nuclear continues to, pull off this massive boon from the AI boost here, and this is a fairly fresh IPO, so the weekly chart doesn't really matter. But we could see things start to look for liquidity on all of these bars in the previous trend from, the capitalization part of the hype wave that usually follows a IPO like this. And we can see we've got one accumulation zone. Sometimes market structure happens faster for some equities than others. Secondary accumulation didn't last long, and now we're well above the expected range of accumulation that we would normally see after capitalization. And we're tested for support. We've broken into it, broke above the reversion. This is where things start looking even more bullish. And primary target at about let's say 2040. I meant to move that to 2045. And then if we break out above that, all of this becomes your primary, and then we just start looking for returns to liquidity zones from the previous bars on the daily chart. And we might even see it hit, I like to call the 86.6 fib is pretty much a born target for looking for these highs to return. We could see $30 out of this thing in the next couple quarters probably. I think we're right in line for it. And then how is the MSTU doing?
My God, we had like 50 million in inflows, maybe 60 million in inflows yesterday. So we're up to 183 now, which is just crazy. I mean, it's not even, I guess it's probably 2 weeks old at this point. But I mean that's just crazy growth.
Yeah, that's a lot of
Not
AUM
not
too.
complaining.
Nope, no one would listen, man. You could
Nope.
you could just keep saying it. No one would care. So we had MSTR doing that split. We knew that we're likely to accumulate in that area, and here we are, doing its thing. We got the 2-for-1 out of it. Perfect. Now we're coming back to support. We're just under, I'd assume about where the 10-day is. So look for that undercut and rally. We're famous for calling out. Settle right around 158, and if we accumulate just above, say 160 would be the threshold on that, we might see this swing back up for another half move in the short term to 170, and then if it follows through and blast above that 180 target again, look left, guys. There's your primary. This is all accumulation. Let's draw it real quick. This is going to be exciting. If you take your primary move here, and we have it, I'm going to go right to the peak here. Stack that above about the mean of this whole accumulation zone, which is where that reversion line was here in recent time. Long-term target's a 290, guys. That's possible. And short, medium term, next couple quarters, we could easily see about 216, 217, somewhere in that neighborhood about this thing. That's a big move. But this is just
Yes, it is.
basic price action, and everything's looking good for all of these numbers, all of these equities. So let's follow the trend. That's quite a bold statement to say it that it's up here in the 290s from where it's at now. But look at Tesla. There's an example. We've seen better. And this is the kind of thing where we get into being able to make some income on this type of stuff too. And you can see those primary and secondaries, they fall right in line with where the price targets are. They work really well. Just Dropbox. Anyway,
Hmm.
got any others on your radar that's kind of popped up in the nuclear sector, or?
Not in the nuclear sector. I mean, I think that's an area, and I know, we're probably talking to traders. That's an area you just got to be there. I mean, you don't know, like, and I did it to myself on CEG. I was waiting for a dip, and then they have the Microsoft news, and they're up 24%. It's like I should have just bought the friggin' thing because you don't know that stuff's gonna happen.
Yeah.
So I'm in all of the names pretty much, and and I'll add on the dips, but so I'm gonna look. I mean, not NNE for me personally because it doesn't have options, but I'll add some SMR today. Um, yeah, another theme that I love that I got out of because it got a little extended, and now I'm looking to get back in is Argentina. So a name I bought yesterday is YPF.
Let me throw this on the grid real quick here.
That had an undercut and rally at its 50-day.
Is it YPF?
Yeah, Y is in yellow, P is in Paul, F is in Frank.
Yankee Papa box. Oh,
Yeah, so it undercut the 50-day and moved back above, and now it's so far so good.
yeah, we're looking at a wedge. Well, the beginning of one. Let's see.
Yeah, so I'm up
Play through here.
12% on my calls. Not nuclear, but I'll take it on a day like today. And this is a theme I've been on for a while, and these stocks went up a lot, basically based on the guy Malay who got elected and just totally, literally took a chainsaw to the government. He's cut inflation. Looks like he might actually turn this economy around. So, that's a place I want to be.
Yeah, that's never a bad thing. You get somebody in there who's quite proverbially kicking ass and taking names, and
Well, especially when you've had, an economy that's been down in the dumps for, as long as I can remember, maybe as long as I've been alive.
yeah,
And you've got someone in there who may be able to turn it around. And again, fixed risk. I mean, I'm buying options. I know what my downside is. This is an emerging market country, and you could have a coup or something like that. So
anything goes, man. It seems to be like there is no rule.
anything goes, yeah, in South America. So
And it's like I don't want to call it, for what it is. It's like you get this banana republic thing going, and eventually someone's going to rise up and say, "To hell with you guys, we're done with this crap." And that looks like the scenario here. So, technical analysis wise, as long as we break this little flag here, we should see a nice secondary move. We can run low target at about 2480, and extension for a full move would be about 2750. A nice potential in this particular vehicle. I like. I might keep this one on my
yeah.
watch list. So I'm gonna add that to your name, YPF.
Another one I bought this morning is FLR,
FLR, Fox Lima Romeo.
Fox Lima Romeo. So it's the energy infrastructure
Ah,
for AI.
oh yeah, Flower
Yeah,
or Floor. What are we going?
floor, I think is how you pronounce it.
You got to roll the tongue somehow, right?
Yeah, so I've been waiting for a spot on this one, and I love the undercut and rally, especially at the 50 or the 200. So I couldn't resist. Wish I had bought it yesterday, but I wasn't watching it, so I bought it this morning.
It's got potential for finishing out the move to the previous measured move target. It's hard to read on a big old sort of parabolic trend that's been on today like this, but again, look at, basic market structure to this thing. There's your reversion line. That's exactly where the pivot is. And at first it pulled back to it, came back above, hit the half mark. That's now our current support around 45 bucks. And, extension target's pretty easy, about 51.50. Cool number. I think that's police code for insane. Um,
Yeah.
you go for an extension, about another half move up takes us to about that 86.6 fib, say about 57 bucks, give or take, right in that range. And it seems to be about follow through for a 1.5 move from where we're at. But it's a hard one to call, but it's pretty regularly giving us primary, halfback, primary, halfback, primary, rinse and repeat. And it just did it here. I think we got a pretty good shot at seeing it to extend at least to that 51.50 target in the near term. I like the technicals on this one. Um, not as much as a couple others in that realm, but it's steady. It's easy enough to see
Yeah,
that
I
that
mean,
trend just continues.
it's more of an industrial type name, so
For sure.
it's
That's
not going to move like some of the other ones we talk about.
Yeah, it's definitely more long term. Looking for like investment grade stuff versus what we like to day trade. We love to
Right.
scalp the
Yeah, yeah, no, I
volatility.
wouldn't be day trading FLR.
No,
FLR is a long-term hold.
definitely.
Yeah, I bought January calls. So
Nice. And then the next leg up takes us right to that range anyway. So if you look at the split between the high and the low overall here on the monthly chart, that falls right in line. It's about the reversion of the entire width of that trend. Cool beans. I kind of like this one. Good
yeah.
long term. And
What I'm watching is China. I
okay,
missed this move. I'm not going to chase it because, the time to buy China is when nobody wants China.
yep.
I don't like buying China when everybody wants China. But I mean, just like don't fight the Fed, I think you don't fight the PBOC. So I would like to get into. I trade FXI, so like I bought the dip on it the other day, and then I sold 2 days ago. I mean, did very well with it, but that's just a short term mean reversion thing. So I'd like to get into those names, but not when China's parabolic.
Yeah, it's
And I may, depending on what Japan does, I may even look to do some sort of pairs trade where I'm long China and short Japan. EWJ has puts on it, which is a Japanese ETF. So
right.
that's an easy way to get short Japan if you want to.
I mean, comparatively, let me pull up EWJ real quick. That had gone quite a bit. Yeah, it's got that rising wedge of doom that typically you'll see for.
Rising sun
Yeah, there
of
you go.
doom, Japan.
Yeah, we'll lay that out. Um, looking for a reversion. I mean, it kind of nailed it back here in August, early August here. It nailed about that reversion target, pretty damn close. But I think it's ready for another swing at it. We'll watch about 60, 61 bucks for a target on this thing, and then reversion for current trend is like 67. And just put some lines on there.
Yeah, and if you look, beginning of August was the whole unwind of the yen carry trade.
Right. So that all makes
And
sense.
and their central bank is a basket case. So I'm thinking, we could have a similar move here.
Cool. And then later on, maybe towards first quarter, we should see this all follow through, and then maybe accumulate and follow with a bull trend. Depends on the election, though. I mean, that's gonna really have an effect on this. I think. We know somebody doesn't like China. Most of us don't like China, so Japan's kind of got the favor on it for so long that it's due for a pullback. It's already had one with the whole yen situation, and yeah, I think we're kind of looking at puts would be a good idea with that. I had one other on my list I can flip back to. ILMN. Another one that's kind of gone through the market structure paces here, and we're up against resistance. This is kind of similar to what I saw with Snapchat. Why the heck I even bothered looking at it? We got a key area of resistance here where we've got some liquidity up around 140. And if we can break through that, we might just finish our move and hit a target up here at about 153. I have several other targets on this thing, and if you look at the weekly chart, you'll see why. We got a bunch of range within these accumulations here. I've traded this a few times before, just short. But right now, I think maybe we got a shot at long-term follow-through, and this giant double bottom is pushing up against resistance here, and that's right where we're looking. If this thing swings, it becomes pretty good long-term, maybe into the end of the first quarter, maybe into the second quarter, going after the first of the year. We might hit a reversion up here as high as 210, which is pretty sweet. So this thing is definitely one I'm keeping on my radar. As for options, it's doable. You can run some spreads on it, but it's not the greatest trade I've ever seen. I like to trade equity on this one. But it's made a nice strong move yesterday. It came right up to a key pivot and then tested it for support today. So I think if we see this thing hold, we should see it continue. And looking at, the it was tested yesterday too. So if this doesn't turn into a reversal here, where you start picking up a rejection at like 137, we could see this thing continue right on through. If it does reject 137, just either scalp a short back for about half this trend, run it back to about 132, and then look to get long in the future. So again, we kind of relate this right with Snapchat. It's the same chart. Had a few fun ones from last week carry over, and this is where I'll just start with Snap. It's at the top of the list. Same kind of deal. Big old sell-offs and capitalization. You get the whole market structure thing. Trades in a range for a while, breaks out, and doing great today. Snap above that $11 bill, and we did break the $11 bill.
Good. 10-day is holding. 8-day probably is too.
We break above that $11 bill. 1190 is a pretty nice target, and that's a pretty decent percentage trade there. So I'm still long in a couple of call debit spreads that I'm holding on to, and then the rest of it's all rolled over to leaps now. So I'm doing very well on my Snapchat position, and it just kind of came out of left field. I mean, it took it a while to break that resistance point. You see, some people call this the H pattern. I like to call it just another double bottom. It's kind of what it is. Once it broke that resistance level and then just started printing off this measured move, it was easy money, and then pulled back and accumulated in that range. And then lo and behold, we pushed right to the edge of a 1.5 move at that 1108 extension there. And if we can break it again, I think we'll finish that move, and it takes us right to just a little bit under, like 1170 of that 1190 target. The 1190 target's a reversion trade target more than anything. So, and I don't even like Snapchat as a company. I just trade the chart. So, don't.
Yeah, I don't even know what Snapchat is. I think my kids may have used it at some point in their lives.
Yeah, kids, and my wife likes to use it to play with kids. She'll do the whole the weird screens you can put on there and overlay the where you're doing a chat with it or a video call with it. You can kind of like make yourself look like Donald Duck or whatever the heck you want. It's kind of cool. It's fun to mess with. It's attractive, and they're their own little niche ad space too. So I mean, it's a I guess profitable eventually, but I wonder what becomes of it more than anything. I almost see this as a buyout target for like Meta or something later on, or who knows. I think Meta even is the parent company, if I'm not mistaken. I don't know much about it. I just trade a damn chart, and the chart looks good. So, your doll over there is starting to accumulate and get ready to kick off again at OKLO. That thing is just ripping. I mean, we've been beating this thing. It's not a dead horse though.
Right. It went green.
It's a lie. Nice. And the reversion.
I like this spot too. Undercut and rally at the 200 day.
That's the word. and it lined right up about with that reversion target we talked about quite a few times. And we're looking to A to B in this liquidity zone. If we break out of it, that breaks our half measured move, and we start to really rip and start seeing about 1280 out of this thing pretty quickly. So this thing has been just fun as hell to trade. I love scalping penny stocks, but I also occasionally love to swing trade them. And this thing has just been, I mean, methodical with the price action. Very nice moves. As far as catching it today on that little dip, nice entry. Look for a break back above the 2-hour 8 period, and if we start getting into some bull modes here above 970, 1005 is the extension target for the day. And then if we accumulate in there, say tomorrow or going into next week, and we start to approach threatening break out of this zone, I'm down for being bullish on it for longer. That thing has just been killing it. And then we already talked about NNE a little bit, but you know, the same kind of deal. This thing's been a great call out. And again, we know where my target is on that. Another one I called out, I think it was Tuesday last week. Bristol Myers. That thing has just been following through price action like unbelievably well. And if you compare this to the OKLO, it's kind of the same deal. We're just looking at the liquidity zone. We just A to B to the thing today, and we're looking at a really sharp move above that zone, and outbreak target was about 57.20 on my radar, and I'm gonna put my purple mark on that thing right there. Going above that though, look at the weekly chart. I mean, the reversion's a little higher than that. We're looking at 59.70 for reversion, and that's just kind of split in the middle. I think we got a pretty good shot of running a 1.5 and getting even a little bit above that, say about 60.5 or so. And I really like this name. I mean, it's kind of been one of the ones we used to beat the crap out of Kramer on, and now we're seeing the follow through. So like, this was one of those charts where we weren't very interested in it back when we were talking about it. You know, it was just kind of a crummy chart, but now it's starting to give the reversion trades, and we love reversion trades. They're the easiest thing in the world to find. And once you pick up the rotation part of it off the floor, I mean, it is a little bit like bottom fishing, but once you're able to figure out what moves it's likely to make, it just becomes like shooting fish in a barrel. I mean, look at this bull flag here. It just absolutely did everything methodically and then broke out. I slipped and said bear flag there, and I remember when I was talking about this initially, I mistakenly said bear flag, and I meant bull flag. That thing has just done everything we need. Kind of ran out of stuff to talk about quickly today. I think we're just kind of waiting to see a couple other setups. And
one other area to just keep an eye on. I'm not doing anything with it today unless something gets interesting. The GLP-1s, the weight loss stuff. So yesterday news, so HIMS, which is something I know the FinTwit guys like to trade, has been getting away with selling a cheaper GLP-1 because Lilly and NVO's product had been judged to be restricted supply. That got lifted, looks like last night. So HIMS is down 11%.
kind of right in that
Lilly and NVO are really doing nothing.
I'm definitely gonna add this to my my radar, man, because it's done everything we like.
Yeah, I mean, I'm thinking I was shorted at one point. Unfortunately, I'm still not. But I'm thinking if that pulls into the 200-day, it may be interesting. And I'm watching Lilly in NVO to see, if it's, and I mean, so far they're both like down a drop, so there's not a lot going on there. But HIMS could be interesting to me if it pulls back and holds support.
I mean, we're either gonna hit the 200, which is just about half of the primary move I marked out here. It's a little above it, maybe. Might wick through it. If we hit that and hold, cool, it becomes both a good short scalp and a good entry for longs. But pay attention, we've got the primary and secondary. This is where our key support is. I kind of split this a little on the low side for this accumulation because it did make a half move first. Uh, I would say if it can hold about 16 bucks, it might go in and give a quick reversion of this bear trend right here, and say land at about 1780 for scalping. In fact, we might see. Let's see here. This is a quarter move, 17 from 1620. We might see this thing touch 1750 today if things get swifty. We'll have to see if there's more buyers here. If it fails to get to 1750 today, of course, yeah, it'll probably short snap this pivot and run for half the primary move back. But I'm going to add this pivot area here at about 1750 because that's going to be critical. If it can get above that and start to accumulate into a bull trend again, it may visit the top of our measured move target again. But if it rejects here, it becomes a hell of a short. I mean, if you didn't short it last night, you know, if you missed the boat, wait
Yeah.
for the reversion trade and then short it again.
Yeah, I think I got stopped out of my short. Yeah, no, I think I lost money on my short.
Oh no,
Can't win them all.
that happens to the best of us, you know. And I was talking
And
I was talking a little bit about that yesterday. I made 51 trades on the MNQ with one of my small accounts because I'll go and start my accounts small, build them up, and then distribute them. I'll pay my bills with most of it and then send some of it to my growth accounts. When I start over, I start looking to try and I have a pride thing where I go and on the first day after distribution, I started with like 300 bucks, and my goal is to double it in one day on the first day after distribution, and I did it, but it took me 51 trades to get there, and I struggled a little bit with my win rate on that. I went down to like an 83% win rate. I do lose a few trades. I do take some heat. And when I'm scalping and day trading a choppy market like it's been, that's going to be everybody, not just me. Um, Even the pros will have a few losses now and then, but when we look at our overall uh, accumulation of all the history since we've been started this doing the bash on Kramer thing, and now we're doing our watch list thing, that whole time we've been maintaining a 94% win rate on our call outs. So like when we start stacking our price action and we call price targets on the stuff we do call out, if we're not interested, we just straight say it. We're going to wait. But if we start making call outs and say, we've got a pretty good idea this is going to hit this price target, out of all the ones we've called out, whether they were on Kramer's list or our list, 94% accuracy is pretty damn good. That doesn't mean we're going to be methodical at trading them all correctly. Sometimes we get a bad entry, or we're going to miss exactly where we would have gotten into it by our analysis, or something goes wrong where it gives a quick pullback and stops us out for a loss, and then we just walk away. Well, that happens to us too. So although our analyst skills holds a 94% accuracy rate, our win rate is going to be, pretty much. I would call it a little bit above the average, retail trader. We're still here. We're making a living doing this, but the average retail trader who becomes successful, I mean, you can become successful at anything above a 60% win rate on your trades. I also know some people who actually maintain positive momentum. They're still making money slowly, but they do it with a 30% win rate. So
you can, this probably predates you, but the turtle story,
yes,
those guys, 30% win rate, they were making fortunes. It's asymmetrical risk.
exactly. And
So heads, you win a lot. Tails, you lose a little. You
exactly.
set up your trades that way, you can be right 30% of the time and make a fortune.
That's it. And it's not going to be an overnight thing. It'll take time, and you have to be willing to make that commitment, and you have to be willing to take some heat. But the idea is make sure your losses are much lower than your gains, and you can have a string of losses. Maybe you lose. You have your stop like 2 or 4% below your entry, or whatever you do that with your risk management. That's fine. But the idea is you could have a string of losers in one home run, and it just absolutely runs over all that loss and gives you a huge
And
gain.
yeah, I would throw something else out there. I'm not a big fan of stops. My short models do have stops because that can get away from you pretty quick.
Right?
I'm a much bigger fan of designing trades for asymmetrical risk.
Same.
So, and that's the cool thing with options. I mean, there are more advanced strategies which we both use, but even outright buying a call, come up with a number.
Yep.
Let's say that number is $1,000. So, all right, a unit for you is $1,000. You put $1,000 into a call, your maximum loss is $1,000.
Right.
Your maximum gain is virtually unlimited if you get on the right thing. So, let's say you've got 50 positions, $1,000 each. You don't need to get all those right for you to do very, very well.
True. And the other part is, I mean, you don't have to lose 100% of that if things start going against you. Um, whether you're using a stop or what some people call a mental stop. With me, it's just basic risk management. Okay, if I throw $1,000 in there and I start noticing that the chart isn't agreeing with my trade idea or something's happening where it's just ripping well below where I would find a support level, and say, $200-300 goes away, I just cut it.
Right. And it depends on what you're doing. I do a lot of counter trend trading.
Yeah,
So if you back test a counter trend model with a stop in there, it is going to really, really, really limit your returns.
for sure. 'Cause then,
But if you're a trend trader and you don't have a stop, you're going to get your ass kicked.
yeah,
So it really depends. Again, so I'm anti-stop because I'm a counter trend guy.
and I hone my skills with day trading, and I've done enough swing trading in my early days with penny stocks to where I know about where those risks lie, and I also have utilized other strategies in it where I compound things. But my idea is simply, if you're running a trend trade and suddenly you get something like this, like with the HIMS right here is a prime example. I can see that bull target. That's plain as day. But how many people missed it, and how many people are rushing out of their stops right now, getting run over, and maybe they chased it after it broke resistance at like 1720, and now they're taking a loss on it after they basically ignored a huge gain. So if you're running a trend and you have a target, cool. But if you don't have a target, if you don't have an exit plan, you don't have a trade. You shouldn't take it, plain and simple. So I always go and hone my skills. I'm down on like a 1 second chart trading the NQ. Pretty much every time I have time to do it. Typically it's in the pre-market. Oftentimes I'll carry it through the first hour of market time. But I'm running in a way where I'm entering and exiting with limit orders on a 1 second chart, and my trade plan is made at a glance. And if it doesn't meet my requirements, if it starts running against me, out now, hit the eject button, wait till the next setup comes in. And I'm picky with those setups. I'm looking for like only the premium setups. If it doesn't look like a great setup to me, I don't trade it. If it's choppy garbage where I'm not quite seeing a good setup to take the trade, I won't take it. But if I see an obvious reversion trade and an obvious measured move setup, easy, run your position. So when you're running on that short of a time frame, I mean, it makes your head hurt after an hour for one, but the idea is you get so much repetition out of that you can glance at any time frame and see the same thing. So if I'm looking at this HIMS chart right here, I can see the primary move, I can see the accumulation, I can see the breakout. My limit order would be entering in the mean of that consolidation if this were on a 5 second chart. And my target would be at the top of one full measured move based on the primary move. So like that limit order is already there. I know that that's my target for profit. And I know that if I don't take it there and it starts ripping against me, I'm just going to give money back and lose on a trade. So I'd rather either A, get stopped out for a gain, or B, have the plan in place already. And if it starts to run against me too much, just exit the trade. Just hit the eject and cancel all button. It's right there. It's on every broker. So yeah, it's kind of tricky to trade with that without a stop, and some people run trailing stops, some people run bracket orders, and just all sorts of different ways to trade, whether it's futures or equities. It's all the same price action. So if you can't put a plan together and execute that plan and stick to your plan, or if your plan falls apart and you can't get out of the way, you're going to be one of those 90-90-90s. But if you're at a 30% win rate on stuff like this, you can still have a profit because you're having your exit at that home run basically, or at a perfect trade, and your loss is going to be okay if it breaks below the too far below the mean of your entry here. You can get out of the way. So I mean, your loss is this size, your gain is that size. There's your home run, and that's what eats up a bunch of these failings at this rate. So that's the idea. And many more words than it should have been. So you had a little bit of news on. I noticed on the email list. I was on the Kramer Tracker email list, and you're making some changes there. So you're going into heat. If you want to talk about that for a minute.
Yeah, so we've rebranded our newsletter around the approach I use in my personal portfolio, which I'm also writing a book about. It's called the Heat Formula. And HEAT stands for hedges, edges, asymmetric, and theme. So, the basic idea is my belief that you should always have some sort of hedge in your portfolio, because when things go bad, they go really bad. You should always look for edges. Those edges could be systematic edges, or they could be structural edges. Like, I talk a lot about the VIX exchange traded products and how I almost always have puts on them because they're designed to go to zero. They're structurally screwed up.
Right.
Asymmetrical risk, which, we talk about all the time, designing your trades, heads, I win a lot, tails, I lose a little, or tails, I don't lose at all. And then looking at where the long-term themes are, because, the S&P 500 is, that's for the normies. It's not, it's not for people who know what they're doing. And I mean, just look, the market's doing nothing. But if you've got nuclear in your portfolio, you're kicking ass.
Yep.
If you've got China in your portfolio, you're kicking ass. I miss China, but you get the point. If you're positioned in the right themes, who cares what the market's doing? So our newsletter every day now is going to be designed about that. And that's what we're going to do.
That's a great plan. I mean, I kind of like that because it gives you a lot more of a structured look at what spaces you want to be in, as well as avoiding all the garbage. So like you're basically a little more focused on stuff that is set up to be a nice basic asymmetric trade. So and looking at the past few days on Q here, it's just, I mean, who's trading this garbage? Not many of new traders are going to be into this. It's been a rough few days, even with my live streams. Like Tuesday I streamed, and I missed 2 legs of this drop before I realized I needed to get with the trend and just start trading bear flags until one failed, and it did. It eventually failed and gave us the half back. But then we look at yesterday, pretty nice little trend right back into that range. Okay. And then overnight, gap down, damn near tested the base of this range. We were expecting maybe a pullback all the way to this LZ here, and then maybe trading the range back to the other LZ. It hit the upper one. We got a couple longs and a couple shorts on the NQ this morning, and now we're just chopping around in a range. So this is crap for day traders. But if you're quick and scalp in scalping, or you want to
Well,
learn something.
and also, I mean, I'll trade these things on a mean reversion basis because mean
Yep,
reversion models, you have edges.
absolutely.
There's three I use: internal bar strength, Williams percent R, and an RSI. And you've got win rates from 70 to 80%. I'll also use there's a proprietary Larry Connors strategy called vol spikes that I use as well, and those win rates are a little bit higher. So to me, that's an edge.
That is an
Then
edge.
you throw asymmetrical risk in there with the options. Your loss is limited and your upside isn't.
There you go. And that you said one key factor there when it comes to trading, mean reversions. And if all you ever did was look for mean reversion setups, your win rate will be dramatically improved. I always tell people when I'm teaching a price action to take on a sticky note or wherever they got that they can put in their view at all times when they're trading is a note that says half, whole, and sometimes quarters. And what that means is for every big impulse move, you're likely to get a half move back. For every big impulse move after accumulation, you're likely to get a whole move. And either we're going to get the whole trend here back, or we're going to get half of it back. We've already done half of it back 3 times now. And then if things continue south, you're going to get this whole move below the mean. So if you're going to break 480 with some force, and we're going to see another day like this, then we're likely to get a whole move down. So half, whole, and sometimes quarters. But the idea is if you focus on what's important to you, and those reversion trades are specifically what we love to look for, reversions and measured moves alike, if all we do is focus on that, our win rate is tremendous. I mean, we can do that with any combination indicators we want. In our respect, we teach price action, so we can literally just watch the candles themselves with no other indicator and find those very, very well. So it's going to depend on the individual of what works for you, and there's many different tools, many different indicators, many different strategies, but the fundamental is simple. Reversion trades are the easiest ones you'll ever find. And then the second easiest ones you'll find are measured moves. Plain and simple. That's why I'm always drawing those little boxes, the 1 and 2, and then a half back. And it's just every time frame, every chart I have ever seen, that fundamental holds true. Those reversion trades are just gold. So yeah, that's kind of the education part of what we do here. I know some of you are probably glazed over and bored to tears, but that's where we're at when the market's choppy like this. We start throwing more education out. As for making fun of people, did Kathy Woods do a boo-boo the other day? I caught the headline and then I lost it, and I guess she started buying back something and got her butt handed to her at some point. I can't remember what the damn equity was, but we should do another show on that and just maybe separate it, do it where we blast Kramer and Kathy a little bit and then go back to our thing. But I don't know. Is the entertainment really worth it? No, we just trade a chart.
Yeah. No, I ignore Kathy, ignore Kramer.
Technical analysis is key, and it's going to win every
Two
time.
people who hate my guts.
Yeah. Well, I mean, they're fundamentalists. They dig into all the company details and everything that every investor in their era ever did.
They don't. Kramer does not dig into anything.
True.
You call Kramer, he looks at the chart. If it's going up, he says buy, buy, buy. If it's going down, he says sell, sell, sell.
I think you're right.
Kathy's fundamentals make 0 sense.
I thought Kramer did do fundamental analysis every now and then.
I mean,
he'll talk about like high points of the company.
Remember, he's being hit with stocks left and right.
True.
Are there names he knows? Sure.
Yeah.
Does he know every stock you're calling him and asking about? No way.
No. And
and again, Kathy's fundamentals. My son works for a hedge fund. They laugh at their research reports.
You know what? Maybe we should just do a short Kathy ETF.
I did that. Been there, done that. Yeah. That's why Kathy hates me.
There you go. That puts you on the radar, though. There's no such thing as bad publicity.
No, no, I mean, she went on CNBC and called me un-American.
Nice. Love that. We're as American as American can be because we, we profit from their failure. Uh,
Yep.
as far as I mean, if we compare ourselves to Kramer, we're both technical analysts to the core. We trade, and the chart tells us everything we need to know about that. But we're here. We're up to the challenge. If you want to throw stocks at us and compare us to Kramer, bring it. I will put that out later in a post and say, hey, if you're thinking about calling Kramer, call us first. Shoot us a comment, even if after the broadcast, whatever. I picked up one last week. I went there. I did it, and I pulled up. This guy gave me like five tickers, and I went on all of them. Four tickers, sorry. They were, and I'm gonna follow up on those real quick. This one was actually really good. WMB he mentioned, and this thing set up primary, secondary. It's shot right up to that target, and if you look at the weekly on this thing, it's got room to run into the next zone. And this was I'll take this as a call out from another dude. He asked me to analyze it for him. I gave him the dope on it, and here we are. Another one he was looking at, and I don't do OTC stocks, but this was pretty good call out. This is SESMF. I have no idea what they are. It's just garbage for volume, but it followed through. It made a 1.5. Nailed it. I even put an extension target on it. This little bull flag breaks. $86.50, pretty easy. And I'll put myself to the challenge. You guys throw any ticker at us, anything you like. I mean, it could be some, OTC stock. I'll look at it. I'll give you the dope on it. I won't trade it, but I'll give you the dope on it. No problem. And he also asked about MBO. I said, hey, wait a minute. It's gonna look for a pullback. Here it is. We've pretty much broken the reversion line. We broke the liquidity zone. We're still looking bearish on this thing, possibly first to about 112. And if things continue to be swifty, 105.75 is right into that mean of previous consolidation. Pretty much a standard move. Primary, secondary, it's all there. Here's the half mark. It's going to follow through likely. So again, feel free, throw us a ticker. APO was the final one you gave me. Made exactly the moves we were expecting. Half a measure move up to the pivot. I mean, just beautiful. So again, we will put it out there and we will say, challenge us, throw us a ticker. Before you call Kramer, call us. We'll give it to you. I guess we can end with that.
APO is the name.
Yeah, APO.
Yeah, that one, I don't know if you know this, but the big ETF issuers are scrambling to try to get private equity into ETFs. So I think that's why this one has been ramping.
Apollo Global Management. Well, now we know what they do.
Yeah, they're private equity.
Very cool.
That's the next big frontier in ETFs, is getting private equity into an ETF structure.
Sweet. I mean, I've taught some private fund manager or private equity fund managers how to run the wheel trade on like TQQQ, and I run mine on TNA, and they're just making money hand over fist running that, and then you get these guys getting private equity into an ETF. There you go. It's a money win. And the price action looks strong on it. It's got pretty much every trick in the book we can see. Nailed targets. Pulling back now, I would say if it, let me look at the 15-minute here. Broke over, hit that resistance zone, gave us basically half of this little part of the trend back. Here's a split. If it gets rejected here, it could go back to the 126 and maybe get back into bullish mode again. But be a little nimble on this one. It's already met its targets that we laid out for it. We don't control it, but price action is going to give you every bit of an advantage on that. But anyway, just to say, we're up to the challenge. Call us in. We'll give you the goods. We're not going to Kramer you and say buy and sell and get you into a trap, because price action wins. So I guess all we did with that series is we proved that Kramer versus price action wins. Plain and simple. Right on. Well, thanks again for joining us, guys. Be sure and tell your friends. We love to like and subscribe. So, hit the bell and you'll get an alert every time we're on. We put them out anyway on our social medias when we're going to be call outs, as well as some good education. So um, love the like and subscribe. Love the following we're getting. And again, just tell your friends. I mean, if you've got friends who are calling Kramer, take them by the hand and be like, hey man, there's a better way. We got you. Thanks again for joining us. We'll see you guys on Tuesday next week. Have a wonderful weekend. Be safe out there. I'm going to do what I can to help out with some of the local situations for the state to the south of me here. So I'll see you guys then.